The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, oil prices have spiked up after U.S. President Donald Trump imposed tariffs on Canada, Mexico, and China. And that's due to fears of crude supply disruption from two of the biggest suppliers to the U.S. But the prospect of lower fuel demand capped gains. Now, Trump on Saturday signed orders implementing a levy on 10% on imports of Canadian energy, along with general levies of 25% on Canada and Mexico and 10% on China. So how are oil prices impacted, and what is next for oil prices? Well, to find out more, joining me now is Priyanka Sachdeva, who is a senior market analyst at Phillip Nova. Priyanka, welcome to the show.
Hello, Hongbin. It's always a pleasure to be on the show.
It's a pleasure to have you on. Priyanka, oil prices saw a roller coaster ride last week, bouncing back from multi-week lows after the White House reaffirmed U.S. President Donald Trump's plans to issue tariffs on Canadian and Mexican imports. So how are oil prices, faring now to kickstart this new month after Trump has imposed tariffs as promised?
Yeah, so Hongbin, U.S. crude jumped over 2% after the Trump's latest tariff news hit headlines over the weekend. And honestly, this looks perfectly justified because oil markets were awaiting a lot of clarity over the tariffs for last almost 10 days. I mean, Trump initially announced to have such tariff announcements as soon as he takes up the office, but that has been delayed. So obviously, January was a month pretty volatile and, with lots of ups and downs. Initially, the prices were propelled because of the Biden administration's stricter sanctions on oil, which displaced almost about a 1 million barrel, away from the global supplies. But despite that, fears that oil, reduced or dropped down, and we saw some profit taking in it because of the laid back approach of Trump in announcing these tariffs. So we did witness this bullish momentum fizzling out of the oil prices in the wake of these tariffs. But these tariffs are finally here, and it's highly likely that oil bulls will jump on it back. But the fears of lower fuel demand because of the higher prices or rates or borrowing cost or fears of slower economic activity is currently capping the surge we should have seen in oil prices for now.
Right. Well, Priyanka, Trump issued 25% tariffs on Canada and Mexico over the weekend. But how does this, have an impact on oil prices?
Basically, he did came up with these tariffs, but, he kept the tariff on Canadian energy a little milder, which is like 10%. And obviously, the agenda behind this was to minimize the disruptive effect it will have on the gas prices on the pump in U.S. So basically, Canada almost provides about 3.94 million barrels of oil per day, which makes about 50% of the total imports of U.S. oil. Adding back another 700,000 barrels from Mexico, that is another 10%. So if the 60% of your daily imports of oil get expensive, it is bound to raise the price of oil and gas within U.S. It makes all logic. And it becomes especially worrisome because the current demand backdrop in U.S. because of the harsh winters is robust. In fact, if you look at the EI's latest number over the demand demand numbers, it is over 20 million barrels a day, which is like about 2.5% up from the last year of the same period. So it is definitely having a bullish impact on prices, and it can jump up the prices on the pump. However, it will be having a negative domestic impact. However, it offers an advantage to European and Asian refiners, because they will be just willing and ready to absorb any oil barrels which are displaced from U.S., like out of the Canadian and Mexican supplies. So the overall impact can matter from place to place, yeah.
I see. Well, Trump also, placed fresh tariffs on China, and China is the world's largest crude oil importer. Did this have a major impact on oil prices as well?
Yes, very much. Right now, the tariff is only 10%, but that is, I think, just the beginning of it. And like you rightly said, China is the largest importer of oil and a significant driver of global oil demand. China has been constantly, struggling to ramp up their economy economy for last couple of years. So if President Trump proceeds on increasing these tariffs on China, it is going to further derail the economic progress that Chinese authorities are aiming at. And when the economic activity is lower, it will automatically have a bearish impact on the demand, and that will exert downward pressures on global oil prices. Additionally, just like Canada, right, they also introduced retaliatory measures on US. So if such measures even China starts adopting, right, China is the leader of manufacturing and consumable goods. So if China also starts such tariffs, like, it will destabilize the entire global markets. So currently, Trump's tariffs hold the caliber, I would say, not just to disturb the global trade, but also to impact economic slowdowns in a lot of key economies or markets, I would say, and which will eventually have a very negative impact on the overall oil consumption globally.
I see. Well, now these tariffs comes as, President Donald Trump has said that he will ask Saudi Arabia and other OPEC nations to bring down the cost of oil, doubling down on his threat to use tariffs. How much does Trump want the prices of oil to come down?
Well, yes, you're right. He may be using tariff threats, or he may be urging or advising Saudi Arabia and other OPEC nations to reduce oil prices. But I don't think he has so far specified a particular target price. But if you look at from a data perspective, he would prefer a range of about WTI range of about $65 to $70 a barrel, because that is ideally a level which balances having affordable prices at the U.S. pump, right? While still keeping U.S. shale refiners or shale producers profitable. There has to be a balance to it, to benefit broader consumer versus the producers who are shelling oil, right? So this price also aligns with his overall agenda, I would say, to lower the energy prices in America and boost, obviously, the economy in return. However, if we look back at history and his past attempts, like I think in 2018, I suppose, he had a similar urge to OPEC, but that only led to a very temporary kind of an impact on producers. So I would say that while we understand that his tactics might lead to certain less premiums by producers, but I don't think they will have a long-term impact on bringing oil too much down,
I see. Will tariff threats be enough to get OPEC nations to slash oil prices, though?
I don't think so, because OPEC nations historically, they have to prioritize the well-being or economic interest of their members also, OPEC members have constantly postponed their plans to revamp or jump the production increase, which is like already, a very cautious approach at supply adjustments. They have been constantly revising the demand outlook of globe downwards because of the bumpy recovery in China and probably the economic struggles we are witnessing across globe. So at this stage, adding back more supplies would mean massive bearish pressure on oil prices, right? Which will bring down the oil prices a lot. And if we see it from a perspective of OPEC members, their economy is heavily reliant on oil exports. And slashing price will be something they would not jump at. It will be very difficult to agree all the members onto an agreement where, you have lower rates as well as lower quota. They would not be happy with that kind of a decision. So I wish I had the crystal ball to foresee whether OPEC will bend to Trump's threats or not. But I think the most important point right now is to wait for the OPEC policy decision tonight. And that might just shed some light on whether Trump's urge or threats is working on them or not.
Right. But who stands to benefit the most from these, low oil prices?
Hongbin, actually, this whole tariff thing actually will lead to subsequently higher prices, and that will impact economic activity and dent the demand for oil. It also will impact the profitability of refiners. So if at all Trump and OPEC countries can leave aside these trade wars and geopolitics and come in collaboration to ensure lower oil prices, somewhere, reasonable, it will benefit consumers, it will benefit refiners, it will benefit all the business altogether, which are, industries which are highly energy based or energy consumption based, I would say. So from a bird's eye perspective, most of the goods and services are dependent on oil prices, and a lower oil prices tends to benefit the global economy as a whole.
Right.
So, apart from the oil-producing nations, like I just told you before, that they might have a problem with the lower oil prices, but rest, everybody will be very happy, beneficiary of it. Yeah.
I see. Well, given Trump's moves in relation to oil prices so far, Priyanka, do you expect oil prices to witness high volatility under Trump's administration?
Well, the only thing predictable right now, Hongbin, is Trump being unpredictable. So, having said that, 2025 will be definitely a roller coaster ride for oil. There is too much in play for oil. There is Trump's tariffs at one end, which can make oil expensive, which can stall global inflation, and by the way, refiners will have not much choice than to pass on the additional cost to the consumer, especially when, post-COVID surge has led to oversupply and weakening demand growth, And on the other hand, these inflationary pressures if prolonged, they will dent economic activity. So whether the jump in U.S. oil production because of Trump's, looser energy policies can counter whatever loss we are witnessing in barrels due to Russian supplies or these tariffs or U.S. sanctions, this is still uncertain. The balance we don't know yet. And how the OPEC nations are going to respond to Trump's influence on oil markets is also ambiguous. So in a nutshell, it will be a volatile year for oil, but we should focus on fundamentals. I don't think there is a broader change in fundamentals of oil as of now. And from my perspective, it should be range bound between $70 to $85 per barrel.
I see. Then, Priyanka, how should investors then mitigate their risks when navigating the oil market?
Hongbin, the most interesting thing about oil is that it impacts all movable goods and services. In fact, it impacts all the businesses, whether it's like a product-based or a service-based. So economists generally are inclined to believe, including me myself, that these Trump's tariff plans will have a long-term impact on economy. It might just add the pricing of consumer goods, like maybe with a 0.1% to every percentage increase in an effective tariff rate. It may also cause hurdle in, deflation process that we are witnessing right now, right? So, and we should not forget the original culprit of inflation back in 2022 was this very surge in oil prices. So investors should brace for stalling inflation. They should brace for higher borrowing cost. They should brace for higher prices of consumer goods. But this comes with an opportunity between arbitrage of U.S. oil and the Brent, right? So investors should definitely diversify their portfolios to mitigate risk and, use the stable form of investments like ETFs or exploring alternate energy stocks or like simply using hedging strategies.
I see. Well, before we let you go here, Priyanka, anything else you'll be keeping a close eye on that could move oil prices in the next couple of weeks?
I would say that Trump's energy policies right now are a bit unclear and should be treated as double-edged sword. Because one way it can impact, the tariffs can impact the global growth, while a looser drilling policy may lead to more supply. So moving forward, the balance between how much oil is lost from global supplies due to stricter U.S. sanctions and how much additional drilling increases in U.S., which will turn into exports, right, is going to shape the oil prices. So in coming weeks, the key factors to monitor would be potential new sanctions on Iranian and Russian oil. If there is an OPEC production decision, a change of their stance, and the progression of probably trade negotiations between U.S. and other trading partners, how or which direction the global trade is moving, whether there is a retaliation on tariffs from other trading partners or not.
I see. Well, thank you so much, Priyanka, for your time and your insights today.
Thank you so much, Hongbin.
Thank you. That was Priyanka Sachdeva, who's a senior market analyst at Phillip Nova. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.